Welcome to Real Estate Insight. I'm your host, Isaiah Valdez. As a nation, we've been battling the COVID pandemic for over a year now. Our economy and our businesses have been suffering in many ways. Many small businesses have even gone under. But there seems to be some light at the end of the tunnel. Due to lighter health safety restrictions, vaccine rollouts, and the passage of the American Rescue Package, the economy is beginning to thrive once again. In fact, investment banking company Goldman Sachs is calling for the U.S. to register GDP growth of 7% on a full-year basis in 2021. Not only does this prediction set us on track to register the highest growth since 1984, it also means that we'll be among the ranks of China's GDP with the possibility of surpassing them. Beyond that, Goldman Sachs believes the economy will be 8% larger at the end of the year than it was at the end of 2020. But this makes sense, right? After over a year of strife, there seems to be some hope now. Steve and Dorothy, I want to welcome you to this show. Is there anything that we should be wary of going into this new era? Steve, I'll start with you.
Well, those numbers are based on a pandemic year. So if we're looking at numbers and comparing a 7% growth on a year that was really probably a 2% growth with the pandemic, then it's not that big of a jump. If we're comparing 2019 to 2021, then we'll probably see like a 5% growth from that. So if we're comparing apples with apples, it is a big growth. It's great for the economy. There's lots of money to be invested into the stock market. In fact, in March, it was 14,000 the Dow, and now we're up to 34,000. So in one 13-month segment of our time, the Dow has almost doubled, which is a little scary to me. I think the economy could overheat with that type of growth. So we have to be careful on what our predictions are. If I could predict everything, I wouldn't be sitting here today, Isaiah. But I will say I am a little cautious. I sold off my stocks when the Dow was 27,000. I've been holding stocks nearly my whole life. This is the first time in my life I haven't held a stock. I'm just being a little bit cautious at this point. I'm getting older. I don't want to have to wait 10 more years to get my money back.
Great input, Steve. Thank you for that. Dorothy, I want to know, do you think this is short-lived? How much longer of this do we have now that things are starting to normalize again and open up?
It's an interesting question. I think temporarily, for a little bit, we're going to slow down the inflation rate. Prices of gas have leveled off. They're not rising anymore like they were January, February, and March of 2021. I do say consumers expect higher prices with like travel and hotels, airfare, concerts, sporting events. Everyone's ready to get out there and thrive again. So those prices are going to be going up. I see inflation rate about 3 to 4%. I've been hearing increase this year compared to only 1% in 2020.
A lot of people want to go out and do stuff. So this is also going to drive those prices due to supply and demand. Another reason is that these events might have to implement some COVID-19 precautions, so this might also drive up the prices a little bit. I wonder how much longer this is going to last and when it'll start to level back down and we'll see prices that we are used to. But let's turn back to the real estate market. We know that housing has been extremely high and we don't know when that's going to level out. But I want to know when interest rates are going to start rising again. Steve, your thoughts?
Well, I think that the interest rates are on an unhealthy low. If inflation is 3% and you can borrow money for 3.5%, that creates a little bit of a debacle there. Money is not free, and right now it seems to be free. So I don't know how long that's going to last.
Well, thank you, Steve. Dorothy, we all know that higher interest rates can't be beneficial to buyers or sellers. I don't think it benefits either of those. It certainly benefits the banks. I think, if anything, once these interest rates rise, the real estate market is going to slow down. Do you have any thoughts on that?
When the interest rates rise, it's going to slow down for sure. I know some of my clients are waiting till the interest rates go up and there are more homes on the market, but I'm thinking you're not going to get as much house for the amount of money you're paying. So
that's true. Yeah, there's kind of a balance there. When it happens when the interest rate goes up, there's a little bit of a lag before the prices come down. A lot of sellers still think their homes are worth more than they are when the interest rate goes up. And a lot of buyers are looking for a bargain at that point. But the house payment, honestly, when prices go up and interest rate goes down, it kind of flattens itself out. There's a balance there. So it's about affordability, I believe.
Thank you, Steve. Thank you, Dorothy. That's a wrap for us today. Thank you for tuning in to Real Estate Insight, and we'll see you next time.